Today we have Brian Smith, the government contract insurance broker, that's going to be talking with us today and talking to us about everything government contracts when it comes to insurance. So excited that you are joining us today, Brian.
Thank you.
I was hoping we can just make this really informal, just talk, we'll just pretend like we're at one of our breakfasts, just having our quarterly chats.
There you go. Sure.
So can you tell my audience a little bit about what you do? There's many different brokers out there, and I know Brian is very unique when it comes to different P&C brokers.
Well, I pretty much work exclusively with government defense contractors across the country. So I don't have a generalist attitude when it comes to insurance. So in other words, I don't just work with companies that are restaurants or the landscaping companies or anything like that. I work with companies that are affiliated or doing work under a government contract. And the reason I've done that for so long is because it's a unique niche, right? Mm-hmm. And like a lot of people that are watching this video, they may have their own type of business that they're involved in. And it could be anything from administration to light industrial and so forth. So if you're working with the government in some capacity, going after government contractors or going after government contracts, then that could be a tie-in with who I am. But I'm a commercial insurance broker, have been so for over 25 years. And because of that, I have a unique perspective, perhaps, on some insurance aspects that involve a PEO and some of the strategies you may want to consider, even if you're not a government contractor. So I thought when we were discussing an interview that it would be a good idea to cover a few of those topics. And yeah, I'm glad we're here.
Yeah, excited to have you. So you work with all types of industries if they currently have a government contract.
Correct.
Okay.
Correct.
So
that could be anything. Like the government doesn't do anything. They contract everything out. So everything from administrative services to working with weapon systems from a programming perspective as a cyber company, information technology. It can be facilities on a military installation. So all those things, and then many, many more. So I'm not just working with companies that are providing arms or any sort of munitions or anything like that to the government. I'm really working in the service sector so that when the government looks for companies to do the stuff that they don't do, those are the people that I insure. Those are the companies that I work with.
Okay. So for the audience that want to go out and bid on government contracts, what are some things that they really should consider if they're going out to bid?
Well, that's a pretty broad question. So I would say that if they're used to working with commercial entities, not working with the government, that the process to become eligible to be a government contractor can be lengthy, and you need to dedicate a lot of time to getting on what they call the schedule. It can be the General Services Administration or the GSA schedule. That's a whole process, right? But there are a litany of resources out there. In fact, Georgia Tech's got a procurement assistance center right here in Atlanta that helps tremendously for companies that are interested in working with the government, because it's a process of getting validated, if you will, and then you actually have to submit proposals and bids so that you can win the award for that work. So it's not I think I'm going to go into government contracting on a Tuesday, and by Friday you're able to bid on a contract. It's pretty extensive. So if you've got people that are watching this that are already involved in government contracting, then they're going to know what I mean by having it as a pretty broad answer to that question.
Okay. So let's just say a company, they're, going through one of these programs here in Atlanta, and they want to know how to get prepared to go get government contracts. On the insurance aspect, what are some of the things that they need to consider before they even get any government contracts to make sure that they're up and aboard doing things correctly?
Well, they're only going to need three types of insurance. And for someone like me that's been working in insurance for a long time, it's very simple. And that would be general liability, automobile liability, and workers' compensation. So unlike working with a commercial entity that may require you to have cyber liability or professional liability, which protects their financial loss in the event you make a mistake, right, as a company. Well, the government doesn't require that. At least it doesn't when you're doing a contract directly with them. So it's a little easier actually for a government contracting company. If you are a commercial entity, well, then you're used to having coverage that far and exceeds those 3 lines of insurance. So because of that, it's a little bit simpler, right? But it's more about the servicing of those insurance programs that make the difference for government contracting clients. But let's kind of get away from the government contracting piece, because I think for your audience, if you're a generalist company, or you're a company that's doing commercial operations, the wide variety of insurances that are required, that really needs to be discussed with your insurance broker or agent so that they understand what the exposures are. And then he or she can then tell you what you may need to know with regards to transferring that insurance or transferring that risk, so you can do what you do in your business to an insurance company. And then that way you can make sure that you're covered. And that includes property insurance. It's also umbrella or excess coverage is another one. And then it gets into a wide variety of other insurances that may be involved. But I think for someone for a company that would be involved in a PEO, I think one of the biggest plays there would be the workers' compensation, and then how that would translate into a greater profits based upon the experience modification factor and its impact on the workers' comp premium.
Okay, so let's talk about workers' comp, because the one misconception that I hear sometimes is they feel like if they're under a PEO model that they're not going to go out, they're not going to be able to go out to bid because they're going to be in the co-employment model.
No, that's not necessarily true. So a company can do that. They just want to make sure that you've got the certificate of insurance for the contractor, if that's the case. If you're a commercial entity, it doesn't matter, because as long as someone has proof that those workers are protected under insurance, then they don't need to be concerned about the transfer of their responsibility on the insurance to them as the party that's using your company. So as long as they have it, you're fine.
They're fine. Good. So let's dive in a little bit deeper. You talked about the EMOD, a company that's experiencing some high risks. Maybe they had a shock loss, somebody, died, some major accidents, things happened in the workplace. So if somebody had an exceeding mod, would that affect their contract with the government?
It could, because what's happening is that they're going to pay a multiple on their workers' compensation. So I have a client that their experience modification factor went to a 2.14. And what had happened was they had a series of losses that were very high, and it also resulted in carrying over the insurance reserve, what they anticipated the costs to be. So there was a slow closure rate on those. And what ultimately happened was they were looking for alternatives to the workers' compensation program we had, because for every dollar their competitor was spending, they were spending an additional $1.14. So they were paying $2.14 to every $1 that their competitors were paying. So when you're putting that together on a contract, you've got to take that into consideration as to your operational costs. So they were looking at an alternative for that.
They couldn't compete.
They couldn't compete. So they came to me and they told me this, and I said, absolutely. My intention is to keep you. Insurance should never be a mitigating factor in whether or not you have a business.
Right.
If you're at a point where the premium's so high, then you need to seek alternatives. And in their case, they went with a PEO very, very well. And so once they did that, their mod came down to the mod for the PEO, which was a 1, and then they were able to effectively compete more efficiently and more successfully with their proposals.
Excellent. What kind of industry was it?
Janitorial. So they had a series of people there were slip, trip, and falls, and there were some back injuries, along with, believe it or not, a dog bite. So when these things happen, it really has an impact. Now, the mod will, assuming the losses come down, obviously, the mod will reflect that and give you a better number. But they couldn't wait. They couldn't hold on and let that cycle of losses go through. So they needed to go with a PEO. And it made sense.
Yeah, definitely makes sense in that case. So can you think of any other type of scenarios that you've worked with any clients when it just didn't make sense for them to be on their workers' comp standalone policy anymore?
Yeah, a lot of times we can still write workers' comp for a company that's in a PEO, if that's what they elect to do. Some PEOs will allow you to break that out. So if you don't have a high mod, but you're looking for the administrative support, then that's a good idea too. So if you're looking for the human resources capabilities of a company, payroll, the other types of things that accompany a PEO as far as services are concerned, then yeah, that's a great alternative for a company. I think as a company matures or they get to a point where they no longer need the support of a PEO, they would break out and go out on their own, but they would have a really good idea as to what to expect, because if you seek out a quote on your insurance costs with regards to workers' comp on the PEO, then you'll be prepared for that whenever you're ready to split off. But during that period of time, you go along with how you report that. It could be done on a monthly reporting basis, or they could audit you at the end of the year. But I think most, and you can correct me.
Yeah,
on
when
this
it's
one.
a PEO, it's pay as you go.
That's a pay as you go. So that's even, yeah.
It's
And
pay
again,
as you go.
that's another administrative
It's a
feature.
huge
Yeah,
administrative fees. They don't have to worry about an audit at the end of the year.
Right. You don't have a surprise amount of money, or you pay too much, or you owe. Yeah, that's better for your cash flow.
Yeah, definitely better for your cash flow.
Yeah.
Sometimes in the PEO world, we hear that a lot of the companies are going captive for their comp and they prefer to go that route. Can you kind of explain to us what's the difference between a PEO, being in a master PEO versus being in a captive?
Well, a captive in itself is going to be, it's an insurance product, and it's part of a group of other companies, either like your company when they call that a homogeneous captive, or it can be a heterogeneous captive where it's different industries or different types of companies. So a lot of captives are homogeneous, which means if you have, let's go back to the janitorial contractor, if you might have all janitorial companies in there. And what happens is that you are now an owner of your insurance program. And that allows you, and this is really more of an advanced type of product, because you have to be able to be prepared to administer that captive arrangement. And it's involving everything from the payroll to looking at your losses and working with what we call a third-party administrator to handle your claims. It's not difficult, it's just different. And it can be a little expensive on the front end, but if you're a larger company and you're looking for ways to offset costs on your casualty risks, which is automobile, workers' compensation, general liability, you can put all that in a captive. And it can also handle, in some cases, very unique risks. It can handle professional liability, for example. So there are situations where a captive can actually be very effective from a monetary perspective for your organization. It's not for everybody, and you need to have an analysis done by an actuarial expert that can determine whether or not you're the right fit. And if you're spending $500,000 a year or more on your workers' compensation and your other liabilities coverages, you'd probably be a pretty good candidate for a captive consideration. Anything under that, I'd say it might be a little too premature.
Okay, fair enough. All right. Well, one thing that you and I have discussed before is oftentimes some of the owners on their standalone workers' comp policy, they don't want to get coverage on the owners. They always tell me, we're not going to file a claim on ourselves, we're the owners.
Right.
But typically in a PEO model, they require the owners have some type of coverage for workers' comp. And you and I have talked about this, and I think you are different than any other broker I've ever spoke to. So can you talk to us a little bit about why you think it's important for owners to have coverage, whether you're in a PEO or not in a PEO?
Right. Well, yeah, it's simple, actually. It's because if you think that your health insurance is going to cover you in the event of a loss that's work related, well, then that you could have a cap on the amount of money in your program, in your health insurance. It might be $1 million. So I tell my clients, when you're working, and that could be going from point A to point B in your car, right? And if you're on the clock and you're making, let's say you're making a lot of money in your business, well, every state is going to cap that amount, right? And you're probably going to have a low rate for that workers' comp. Let's say if it's clerical, 8810 is the clerical code. You might have a 30-cent, 25-cent rate, which means 25 cents per $100 in payroll. In other words, it's a very, very low rate. And Now, if you're covered under workers' compensation and you're in your car on the clock and you get into an auto accident, well, you've got a couple different scenarios there. One, it's going to be covered under the auto liability, but if you don't have workers' compensation for yourself and you have long-term medical care, then you've got to figure out where's that going to come from. And most automobile liability limits for someone that may hit you may only be 100,000 or 50,000. So if you're looking at a long-term medical or hospital stay, you're going to blow right through.
Oh yeah, if you're going to go to the surgery, you're easily going to be past the 50,000 mark.
And so what I tell the owners and others that are excluded on the insurance, I'm like, you have an unlimited medical. And that means that under workers' compensation for every state, unless they're, different in some way, but they're not. If you get hurt, you have unlimited medical. So if you're recovering from a neck injury or a back injury, that could easily exceed $1 million. It depends on the long-term care, right? Yeah. So you don't have to impact you're not going to impact your health insurance, which could say no because you're in an automobile accident. I don't know what the conditions are, but if you're working, then you need to have it under workers' comp. So every single one of my clients has workers' comp for the owners and the executives, because there's no reason not to. It's not an expensive venture. I think a lot of people need to know what that premium is. And if they just merely say, we don't want it, we've never had it, then I think it would hearken to the fact that they need to have more of a discussion, because I don't think they know enough about what it can offer a company versus what faults there would be with it. There really are very few reasons. I can't think of any reason other than.
What if it's a really high risk industry? They're a roofer and they're going to have to pay a lot of premiums, or the solar panel type industries.
Well, typically owners or executives aren't doing the field work. So they're not going to have that as an issue.
Exposure. Okay.
Yeah. But if they're a smaller company and they're doing that work, they should be covered under comp anyway, because if they're going to get hurt, to be excluded it's a short-term fix for a monetary or cash flow problem. Right. And if that's the case, then if you're trying to save a few bucks here and there by eliminating you as part of the workers' compensation program, then in my opinion, you have bigger business issues. So I would say that this is something that every owner of every business that's out there should be covered under workers' comp.
Excellent. I'm so excited to hear you say that. So I actually had an auto repair company one time, and they never had workers' comp on the owners. And I was like, well, the PEO does require it if you want to, join this particular PEO. And they were hesitant, but they ended up doing it. And it so happens that one of the owners actually slipped on ice in the snow and filed a claim. And she was happy she had it because it didn't affect her medical.
No. And that's that's a long recovery time. If you break a leg or you injure your back, there could be physical therapy, surgery, a lot of medical. And by just having that added in there, it helps them. And I will tell you this, after years and years of experience, I've never had anybody say, you know what, they paid me way too much for that claim. They never say that, right? And people, I do hear, well, I'm really concerned about the premium. I don't want to overinsure. We don't want you to overinsure either. A PEO doesn't want you to be overinsured. Any insurance broker doesn't want you to be overinsured. So by having a thoughtful conversation with your insurance professional, either it be through the PEO or outside of the PEO, general insurance, you're going to be able to offset those concerns and be prepared and know exactly what your insurance costs are going to be, and you got the right coverages in place so your business doesn't have an unnecessary uncovered loss.
So just for our audience, I mean, you and I both know the difference between a PEO, workers' comp under the PEO platform, and a PEO and the workers' comp on a standalone that you're typically administering for your clients. Tell us, what would you tell our audience here? What are the two differences between having workers' comp on a standalone versus a PEO?
The only difference is going to be the fee associated with its administration in the PEO. When you break out your workers' comp on a standalone basis, you're no longer going to pay the PEO the fee that's added in there to administer that program. So, for instance, one of the most popular carriers for PEO workers' comp is the Hartford. And you can get the insurance through the PEO program, right? They've got a master program with Hartford, and everything works easily through their payroll allocation system or pay-as-you-go program. So it's real simple. It's plug and play, right?
Yep.
Now, if you were to spin that out, you could save money on the fee. Now, the other thing is that when you're in a PEO, you're really at the mercy of them to tell you what the classification codes are. Whereas when you break it out, you have more say-so on how the classification codes are going to be allocated with regards to your policy. So there's a little bit more room for discussion, and there's no fee associated with it, because the premium, you're paying your insurance professional through the insurance company paying a commission. So you're not paying that. Whereas with a PEO, they're getting whatever the commission is for the workers' comp. And I don't know how that works in a PEO world, but I do know that you're going to be charged a fee on top of that. So that's really the only difference.
Yeah.
And one other thing, there is one other
yeah.
thing. You will not be able to historically get US L&H coverage, which is Longshore Harbor Act coverage. So if you've got anybody working near the water, you're not going to be able to get US L&H coverage for your employees. So then you will need to go outside to another provider of workers' compensation just to get that coverage.
Yeah, that's true. I've heard of that quite a bit. You talked about classification. So this is a good subject because I'm typically working oftentimes with companies that are already in a PEO. Then I submit it to several other PEOs, and then they tell me, you know what, I think these employees are misclassified. Mm-hmm. And so then we start to dive into, well, what exactly are these employees doing? What are the job descriptions? When you said they have a little bit more flexibility on a standalone versus in the PEO, talk to me a little bit more about that.
Well, it depends on what the arrangement is with the PEO. For instance, if you're working with your broker, then you're going to be working directly with a licensed insurance professional. If you're working with a PEO and you're working with someone that's not licensed, so let's say that they're working with the workers' compensation program, but they're not a licensed insurance agent. Well, one, they're not supposed to be talking to you about the insurance program. They're just not supposed to. You got to be a licensed professional to discuss the insurance aspects on the placement of the workers' compensation. That's number one. But the other thing is that the understanding of how to properly classify something. So when you're working with a PEO, you're basically working directly with them, and they are going to be talking to you about whatever classifications. They're going to try to justify that with you, right? Well, same thing happening if you're working with an insurance professional, but that dialogue is probably going to be a bit different because we're not looking to, we want to true up where your exposures are, but I can't really talk to the fact that is a PEO discussion on SIC codes proper or appropriate? No, I don't think so. I think it's just really a matter of having more flexibility with the insurance professional you pick.
Yeah. And typically under the PEO, their underwriters are licensed to discuss.
No, the underwriters are.
Yeah.
Right. But if you have a PEO representative, I'll give you an example. So if you've got someone soliciting your company from ADP directly, right, and they're not an insurance professional, they're not supposed to talk to you about the insurance program. They're supposed to flip that discussion over to a licensed insurance professional that works within ADP's insurance placement group, right?
Right.
So need to be aware of that because you want to make sure the person that you're talking to clearly understands what workers' compensation is, how it operates, everything and so on and so forth. Because if you're not a licensed insurance professional, you're not supposed to be talking about an insurance product that you're not licensed for.
Yeah. So let's talk about a little bit about companies and their websites, because under the PEO model, the underwriters, they're underwriters of teams, or basically the workers' comp underwriting department. They're going in and doing a lot of different research on the SIC codes and looking at the website. Oftentimes we see these companies that look like they have people flying out of planes and bridges, hanging from bridges. Give us some insight on how you help clients. Are they really, do they really have that exposure, or are they just outsourcing that to like a third-party company?
That's a very good point. And a lot of times I'll go through a client's website before we submit the insurance program because I'm looking at it from a different perspective.
Right.
So having a website's a great thing, right? It's your storefront, but you have to have it to be appropriate for what you're actually doing. And if you are putting images on there that are not truly representative of what your company does, You just want it to look interesting. Well, you got to
Yeah.
look at it from another perspective. And I can tell you that every underwriter is going to look at your website. They're going to go out there and they're going to see, what are you putting out to the world? And I've had underwriters come back and say, well, they're doing window cleaning, high up, or they're doing install for fences versus just being a fencing company. They're actually, instead of farming that out to subcontractors, they're like, yeah, they got their people that looks like they're putting fences up, as a simple example.
Yeah.
But if your company's not doing that, then there's no reason to illustrate it on the website, because the underwriter is going to try to figure out a way of saying no.
Exactly.
Now, the reason they're going to do that is because we are in a hard market, meaning that prices are going up. And as a result of that, underwriters have a lot of submissions from other agents and brokers, right? So when you're looking at your when they're looking at your website, the underwriters, they're trying to get away from, in some cases, writing the insurance, because it's not that they don't want to deal with you. It's just that is going to be the first indicator as to what your company does. So if you have images on there that look hazardous or risky, or you put in there work that you did 5 years ago, but you're no longer doing anymore, they're going to look at you doing that work still. So when they compare the website to your insurance submission, there's going to be a lot of questions as to whether or not you're being in the information that you're providing. And a lot of times what happens is a CFO, for instance, or a controller will be responsible for the insurance program. Well, when's the last time they actually looked at their
website? Yeah, exactly.
So they're caught between a rock and a hard place because they're working with people like you to get the information, or they're working with someone like me, and now we've got to deal with the underwriters coming back and forth going, nah, we really don't want to deal with that. And once an underwriter says no, that's pretty much it. We have to go back and try to convince them of it, and they've entered into their system that it's declined, we can't get that changed.
Yeah, it blocks it out.
Yeah. So it's important that a company keeps their website up to date. It doesn't create a fearful review by the reviewer, and that it's appropriate for what your exposures are. I mean, you want to sell who you are as a company, but at the same time, from a risk perspective, what's it saying? And I know that that's a different eye, right? So someone like me could look at it quickly and you could say, you may want to consider changing that. And some companies say, no, this is who we are. This is what we do. That's fine. That's fine. So then what we need to do then is to figure out a way of telling the underwriter what you don't do. So in every narrative,
painting the picture.
So we can direct them accordingly, right?
Yeah. And we're both doing that on both of our ends, trying to paint the right picture for the underwriters, the appropriate picture, the accurate picture. So, well, Brian, I certainly do appreciate your time. Is there anything else you would like to add? Tell us a little bit about your company and what would be a good fit for you.
Well, even though I work for the Insurance Office of America, and even though I work with government defense contractors, I can do other types of companies, but they usually come from referrals from my other clients. So it's that way it keeps it pretty linear. But we do have a wide variety of other experts that can handle any type of insurance program out there. And we're located here in Atlanta. So it's not, we're headquartered in Florida, and we've got like 1,200 employees across the country. We do international work, but we are privately held. And if you are looking for a good option, the Insurance Office of America, IOA, is really a good starting point, especially if you're looking for something different and you want to get what I call data point on what your pricing is, or to make sure that your coverages are appropriate. We'd be a pretty good place to start that hunt from. Yeah.
Okay.
Glad to be working here.
Excellent. Well, you heard it. If you need another second option, second set of eyes on your insurance policies, you know who to call.
Very good.
Brian, thank you so much for your time.
You're welcome. It's good talking to you.